If you're paying rent and not writing off your rent payments, let's go ahead and change that. Hey, my name is Karan, and I help those who watch this channel save on taxes and build wealth. And if you're anything like me, you want to know how to take normal everyday expenses and write them off so you pay the least amount of taxes possible. And look, rent is no exception. Especially with rents rising 20 to 50% in some areas, we could all use a write-off on rent payments right about now. So here's how to do it. By the way, if you have a second, hit the like button for me because it truly helps the channel reach more people. Okay, so how do you go about writing off your rent? Well, the IRS allows qualifying taxpayers to deduct certain home expenses like rent from their taxes. And this is true whether you rent a home, an apartment, condo, mobile home, and even a boat. But let's break this down a bit, starting with who qualifies. So according to the IRS, to qualify to write off your rent, you must use part of your home to do at least one of the following. A, operate a business out of your home exclusively and regularly. B, meet or deal with clients, patients, or customers for your business in your home exclusively and regularly. C, have a separate structure that is not attached to the home that you use for business. D, use part of your home for storage for your business. E, rent your home. Or F, operate a daycare facility out of your home. Okay, that was a lot, and the IRS tends to make things complicated. So let me put it in English for you. You may be able to write off your rent if you use part of your home exclusively and regularly for business purposes. For example, if you have a home office, you would qualify. I do want to put an emphasis on for business because unfortunately, W-2 employees are not able to take the deduction. To be able to write off your rent, you need to own a business or be an independent contractor. And if you qualify, here's some good news because the ability to write off your rent is just a small part of something called the home office deduction. And in addition to letting you write off your rent, the home office deduction also allows you to write off other everyday home expenses like renter's insurance, utility bills like electricity and internet, cleaning expenses, repairs, and any other fees related to the place where you pay rent. And if you decide to own a home one day, the home office deduction allows you to write off things like property taxes, mortgage interest, homeowner's insurance, and even depreciation. Now, you may be rubbing your hands like Birdman right now, thinking about all the things you're gonna write off, including your rent. But there's something I have to tell you. You are not able to write off 100% of your rent or 100% of your utilities by using the home office deduction. The IRS can be generous at times, but not that generous. Your allowable write-off will be based on the size of the room you use for business. And still, this is one of the best write-offs you can take because you don't have to spend extra money to get it. So how exactly does the size of your room affect the size of your write-off? Here's how. There are two ways to determine how much you can write off. First, there is the simplified method. By using the simplified method, you don't write off actual expenses like rent. Instead, you take the square footage of the space you use for business and multiply it by a rate set by the IRS. The current rate is $5 for a max of 300 square feet. So, for example, if your space used for business is 250 square feet, you will multiply 250 times $5 for a deduction of $1,250. With the simplified method, even if your space is above 300 square feet, you will have to use 300 as the max. Now, the second way you can take the home office deduction and actually write off expenses like rent is to use the regular method, also called the actual method. And with the regular method, you can deduct direct expenses such as repairs directly in the space used for business in full. And indirect expenses like rent and utilities are deductible based on the percentage of your home used for business. You find the percentage of your home used for business by taking the square footage of the space used for business and then dividing it by the total square footage of your home. Okay, for example, let's say the place where you rent is 2,000 square feet in total. And let's say your home office is 500 square feet. You would divide 500 by 2,000, making you eligible to deduct 25% of your indirect expenses. So let's take a look at some examples of indirect expenses. So let's say your rent is $2,000 per month and your utilities and all other qualified indirect expenses are $1,000 per month. Basically $3,000 a month or $36,000 a year in total indirect expenses. If 25% of your home is used for business, your eligible write-off using the regular method would be $30,000 times 25% or $7,500. All right, I don't know about you, but I'd rather have a $7,500 write-off over a $1,250 write-off. And that's the difference between using the regular method over the simplified method in this scenario. Now, whether you rent a mansion or a modest apartment, this can add up to huge tax savings. Can you imagine how big of a deduction someone like Drake or Oprah could claim if they used the regular method? Okay, back to reality. Unless you're allergic to math, when deciding which method to choose, opt for the one that will provide the biggest write-off, as the regular method isn't always the clear winner. Note that if you do decide to use the regular method, keep detailed records of your expenses, just in case you're ever audited. And you can use Form 8829 to figure out the expenses you can deduct if you decide to use the regular method. Now, I'm gonna place a few videos on the screen I think you should watch next. If this video helped you today, please hit the like button for me. And don't forget to subscribe to our channel so you don't miss out on future videos that can help you save on taxes and grow your wealth. I'm Karan from Life Accounting, and I'll see you in the next video.